So I just came from an event from the Peterson Institute of International Economics where Axel Weber, the former president of the Bundesbank, was giving a speech about the global macroeconomic outlook. I think he summarized the global macroeconomic forecasting over the past few years perfectly. He said it reminds him of the movie Groundhog Day. So the most recent release of the IMF said that they've revised their global growth forecast downwards, citing poor performance in the first half of the year and a materialization to an extent to some of the downside risks they predicted a year ago. And now this is a trend that's been going on for the past few years where they've revised their forecast downward and they say, oh, next year will be fine. But they highlighted 4 key downside risks in the most recent World Economic Outlook that don't seem like they're going to go away in the next few years. It might actually become more of a burden on the global growth situation in the next year. So the first key downside risk is low inflation in advanced economies. And this is particularly troubling in the Eurozone, where we've seen low inflation, that is inflation of less than 1% over the past year. And it poses some problems for the recovery in the Eurozone. It affects consolidation of debt and the amount of room that these governments have to maneuver their fiscal budgets. It affects wage adjustment in the Eurozone periphery specifically, as well as the allocation of credit among the Eurozone countries. Now, the second key downside risk they identified was the eventual tightening of monetary policy in advanced economies. Now, the recovery is underway, and this is especially happening in the US and the UK. And as such, the Bank of England and the US Federal Reserve are considering tightening their policy rates in the near to medium term, sometime next year, most likely. And this is causing capital to flow from emerging market economies to advanced economies. And as such, there's significant financial volatility in emerging market economies, as well as exchange rate volatilities that could significantly hurt their growth prospects over the next few years. The third major downside risk identified is, of course, geopolitical risks. Over the past year, the conflict in the Ukraine and Russia has become increasingly uncertain, as well as the situation in the Middle East. And then the fourth key downside risk is search for yield among financial markets. So because of all the liquidity that's been pumped into the system from loose monetary policy over the past few years, investors are starting to seek higher returns and riskier assets. But we're not quite sure if assets are priced correctly or if the risks are priced correctly. And this might create another bout of financial volatility in the few years to come. So it might be a groundhog situation a year from now. If these downside risks materialize, we might see another revision downwards. And perhaps in the next 6 years, eventually we'll get to potential as we've been expecting.